Hi, everyone. Welcome to Your Money Matters. I am your host, Angela Giroux, and joining me today, I've got Clint Lee, our research analyst, and of course, Ted will not be joining us. He is on vacation. Ted, hope you're enjoying yourself. Now, before we get started, I did want to point out that Ted put together a presentation that he'd like to send you, that you can click a link above or below. It's on a big opportunity that he's targeting for Bauman Letter subscribers, and it's going to come into play today. Clint, I know we're going to lead into it a little bit here, but for right now, I want to back up a little bit and talk about our last video that we did, the last Your Money Matters, where we talked about cryptocurrency and the crash that continues. But this week is kind of another story, because what we're seeing is the return of the meme stock. They're rallying again, just as they were at the beginning of the year. So let me ask you, are these two events somehow linked?
Yeah, I think so. I mean, let's talk about another rotation that's underway. Seems like we can't stop talking about rotations this year, but yeah, it looks like there's a lot of money, especially retail money, that's coming out of the crypto space that's now floating back into these meme stocks. And consider the evidence. Let's take a look at a chart real quick. Here's a chart of Bitcoin against AMC, just going back to the start of April. And I circled on here. I mean, you can see this clear inflection point of when Bitcoin had kind of bounced around at its peak and is now sold off, now down about 37% since that point. While AMC just absolutely took off, up about 193% just over this time frame. And there's other sites out there, other data providers that are tracking what's going on. And one's reporting that retail net buying of AMC shares was up 273% last week compared just to the week before. But it's not just AMC. We're seeing it across a number of these other meme stocks that we were talking about earlier in the year. And so Goldman Sachs actually tracks an index of stocks that are popular on the Wall Street Bets Reddit page. And just last week alone, that index was up 20%, with that underlying basket of stocks that they're talking about on that site.
So what's going on here? Is it another short squeeze situation?
I would say there's probably three key things right now. One is the retail involvement we just talked about. So there's a flood of retail money that's coming back into these names, as we just highlighted with those stats. Yeah, I think a short squeeze is definitely a part of it. I think for AMC, their short interest as a percent of the shares that are outstanding is somewhere right around 28 to 29% as of last week, at least, which is a really high number. So yeah, if there's an institution and they've shorted the stock and they're sitting on these big losses, they're likely getting margin calls where they have to go in, buy back the shares to return them to who they borrowed them from. And so that just creates that much more buying pressure. But then I wouldn't be surprised if there isn't some institutional involvement in some of these meme stocks as well. And that's because there's algorithms that come through all these news releases, social media sites, and they're looking for an uptick in those mentions, whether positive or negative, around these stocks. And these algorithms will trade ahead of that. As they start to pick up this increase in news sentiment, which we've seen with stocks like AMC. They will buy into those names. But if you're watching this and you're considering whether or not to go into these types of names, I mean, those three factors we just rattled off, whether it's trying to guess what retail investors are going to do, what algorithms are going to do, or what people that have been short these names are going to do, those are incredibly hard to predict. And I think it's tough whether or not you're a short-term or a long-term trader. If you're a short-term trader, I think you're gambling with these stocks right now, whether it's the name like AMC or in the crypto space. And just to illustrate my point on this, just take a look at Bitcoin. What Bitcoin has done since its mid-April peak. If you were watching crypto prices and you watched Bitcoin kept rising and you got in around that April 15th peak, according to this chart, you are now down about 40% since that time. Ouch. And I can show a similar example with the first big surge in price that we saw with AMC and GameStop back in January. If you got into those names sort of that 1 week after they saw a big surge in price, here's what happened over the next 3 weeks or so. AMC went on to fall about 50%, while GameStop lost about 90% of its value. And I know you're going to say you're cherry picking these dates, but I'm just illustrating how hard it is to time these things. And if you get the timing wrong, what's your strategy? What's your exit strategy to get out? But then I know the pushback too is that, well, maybe I'm a long term, I'm a buy and hold. I think these things with AMC are overblown. I mean, they're rallying today as we're recording this. That's on the back of I believe it's an 8 million share offering. They're raising $230 million that they'll use for a variety of things. But I mean, consider that they've got about $5 billion in debt on their balance sheet. There's about $450 million in deferred lease payments. So if you're taking a long-term look at this, and you buy the stock, you're an equity shareholder. You are last in line to get repaid if they end up having to go through some sort of a restructuring or bankruptcy event, or if they just keep issuing shares. It's just going to keep diluting the value of your holdings. So once again, if you're a short-term trader, you're gambling with these things, and the long-term viewpoint doesn't look that much more promising either.
Yeah, it's like that. I sent you that article. We were talking about it last week, that there's another FOMO ETF out there. And personally, I find that terrifying. I wouldn't touch it with a 10-foot pole. Maybe that's just me. Okay, so we're seeing this drop in Bitcoin. We're seeing this surge in the meme stocks, but as you mentioned, very, very high risk there. So obviously, we still want to make some big gains. So where can we look? What are some safer bets, you think?
You mentioned FOMO. I mean, that's everyone sort of greed takes over when you see AMC or a crypto jumping 20-30% plus in one day. You want to get in on that. But if you want to take a safer, more stable approach, I mean, there are still terrific opportunities out there in the markets, and really, I think it's about kind of to stack the odds in your favor. You need long-term secular tailwinds, and also doesn't hurt to have government policies supporting the industries that you're looking at. And so with that, for me, I think sort of the renewable energy space checks a lot of those boxes. And there's actually one ETF I hadn't done much work on. I started looking at it over the weekend. It's BATT. It's the Amplify. I got the name written down here. It's the Amplify Lithium and Battery Tech ETF. And it's just that's one way to play everything that's going on in the renewable energy sector. With this lithium and battery tech, it's looking at companies that are mining the minerals that are used to produce batteries, companies that are involved in manufacturing batteries, or developing technology to make batteries perform better. Or even the EV, electric vehicle manufacturers that are using them in their products, or as part of an energy storage solution as well. So, kind of up and down the supply chain, looking at companies in that space. And when you think about the tailwinds, I mean, I know the projections right now for the global electric vehicle fleet, it's up about 1,300% to 116 million units through the end of this decade. Here's a chart on global energy storage, how much an annual capacity additions we expect to see. Once again, this is through the end of the decade, but a 35% compound annual growth rate. So 35% growth each and every year through the end of the decade for energy storage additions. And then you've got sort of the government policy support behind it as well. I know that the infrastructure bill that's going around in Congress right now, there's nearly $300 billion set aside in there to support renewable energy, whether it's on the electricity generation side, or to support the build out of sort of the electric vehicle infrastructure network to make that a reality. So there's a lot going on there with that. And then, if I just look at the chart of the ETF, it doesn't look anything like the spike ups and downs that we've seen in Bitcoin, some of these meme stocks recently. But here's the BATT ETF. And I would think that this right now is a very attractive entry point because we've gone through sort of this period of consolidation really since the beginning of the year. We're starting to see that turn back around. We've recently recaptured the 50-day moving average as a black line on here. That came on an uptick in volume, and you've got several gauges of momentum like the MACD or the RSI indicator that's picking up as well. And so that would have me at a minimum targeting these prior highs on here, but really I would be looking for a breakout to new highs just over the near term. But then we've talked about all the long-term tailwinds that are supporting the companies that are in this ETF as well.
And it is the perfect segue to Ted's new presentation, which is about renewable energy and his favorite ways to play it. So again, please click the link above or below for more details on that, as well as how to join the Bauman Letter risk-free. And please comment below. Let us know what you think. Are you riding on the meme stock train? Do you think crypto has further to fall? And what are your thoughts on renewables? We want to hear from you. So please make sure you comment below. Clint, thank you so much. I will see you next week.
Thanks.